All right, thank you for that, Hero. We've got both Chandan and Richard also standing by with us, so let's get their view on some of the Chandan, let me start off with you. What are some of the indicators looking like? Do you see us moving beyond 8,000?
Yes, good morning. If you look at the entire market movement, we have seen a strong rally in the March and the April month. Nifty rallied by more than 1200 points, but now finding hurdle at higher levels. It failed to surpass the crucial hurdle of 79.79 and 8,000 psychological barrier, and because of that, we may see some consolidation. We have seen the huge liquidity in the month of March, but in the April, we have seen the buying of around 3,500 crore from the FIIs. We have seen huge call writing at all higher strike, including from 8,000 to 8,200 strike, which is also keeping the upside limited. We have seen the strong rally without any meaningful correction, so we require a time or the price consolidation to start the next leg of rally. So now till market remains below 79.79 zone, it might consolidate with downside multiple support near to 77.77 zone.
Richard, let's get your view in as well on the index.
Good morning. Overall, we have seen that last 10 trading sessions, markets have just consolidated range bound. If you just see the entire month of April, then at the start of the April month, 77.50 was acting as a major resistance. We had a breakout of the 77.50 in mid-April with a gap up opening, so that was a positive sign. However, since then, last 2 weeks, markets have consolidated from 77.50 to 8,000. So the new range after mid of April has become from 77.50 to 8,000. So it would be crucial to watch that which side Nifty gives a breakout of from this range. So unless 77.50 is broken on the downside or 8,000 is taken out of the higher side, it's very difficult to tell that which way the next directional movement would come. As of now, the overall trend structure continues to be positive. We have higher top, higher bottom formation on the charts. Unless only if 77.50 is broken, then I think this correction would come in, and it would get extended towards 7,500 levels. So for short-term trading perspective, after today's gap down opening, we would be again at the lower end of the range. I'm talking about Nifty spot 77.50, 77.70. If this range comes, which is about 70-80 points lower from Friday's closing, then one should take that as a buying opportunity, just because the risk reward would be much favorable. Keep a stop loss below 77.50 on closing basis, and again expect a higher end of the range around 8,000.
Good morning, Richard. I want to bring up a candlestick chart of a month, and I think you made some very valid points. I'm trying to see the action in the market in the last 2 or 3 trading sessions. And if you look at the volatility, the index kind of collapsed in the last trading session and recovered back. But before that, it's starting to show major cracks. So we can't rule out 77.50. I'm looking at the Nifty for the last 7-8 trading sessions, and it's gone into some kind of a channel. But 8,000 is a multi-year resistance. I mean, it's stopped there many, many times, Richard. What is the likelihood we could dip below 77.50? And if we do, what do we need to do?
Sashu, just because of this 8,000 multiple resistance, that's why, in spite of giving a breakout above 77.50, we have not seen a big follow-up movement. And we should not also forget that, from the levels of 6,800, 6,850 zone, in just about couple of months, we have seen Nifty rallying about 1,200, 1,300 points from its low. So that one needs to keep in mind. Any kind of profit booking, any kind of breach of the support levels would then lead to profit booking of these long positions which have been created in last 2 months. So that's why one should see the 77.50 as a crucial level. If this is broken, then definitely some short positions would be created because breach of the support levels. This would be supported by unwinding of the long positions which have been done last 2 months. So that's why, in case if 77.50 is broken, then I think the next logical support would come around 7,500, 75.50, which would be due to profit booking on the long positions as well as fresh shorts over there. So any long positions, keep strict stop loss below 7750. And on the high side, definitely 8,000 we have seen is acting as a crucial resistance. So this ongoing rally which we have seen in last 2 months, if it has to continue, then definitely it has to cross 8,000 levels. So firstly, since we are already at the lower end of the range, just hold on your long positions as of now by keeping a stop loss below 7750.
Chandan, rather than get into all the FNO data, I wanted your personal view on what are the options writers doing, because they don't have a chance of doing stuff on margin. They have to put up the full money. They have to they are going to take an unlimited gain or unlimited loss, at least theoretically. Are they writing more puts? Are they writing more calls? And what does that indicate about the direction of the market?
Yes, looking at the option data, we are witnessing more call writing, and because of that, put call ratio is below neutral. Well, in the last series, put call ratio headed to 1.17 and now back to 0.94. Usually, the lower put call ratio indicates that more call writers are aggressive than the put writers, and because of that, market is finding sustained pressure at higher levels. Now, talking about the selective strikes, we have maximum put open interest at 77 followed by 7,000 directly. So that is a cause of concern for the traders. On immediate basis, traders are looking market to find support near to 7,700, and if market fails to hold that level, then the profit booking might be on the deep side. While on the call side, we are witnessing fresh call writing at 8,200 strike. So on immediate basis, as per the option data, we are getting a range of 7,700 to 8,200, but this is just the start of the new series, and call writing might shift to the 8,000. In that scenario, the range might be in between 7,700 to 8,000, and breaking the 7,700 might give a fresh sign of negating the immediate bounce back move and start of the fresh leg of rally on the downside. So traders need to be cautious in the May series. In the previous series, we have not seen any significant change in the volatility index. India VI closed flattish on month-to-month, expiry to expiry basis. And now if volatility index slightly spikes to higher levels, then that may give the profit booking attraction to the market. Usually VIX and the index has negative correlation. So looking at the option data, put call ratio is hovering below 1. Call writing is being witnessed at 8,200 and 8,000 strike. Put writing is directly shifted to 7,700, and then lower strike are quite active. So that indicates that traders are going for the hedging activity. They are quite concerned on the market because multiple time in last 5 months market has failed to surpass and hold 79 to 8,000 zone, and if it fails to hold, then profit booking and the distress selling might attract the profit booking decline on the lower side.
All right, let's take a very quick break. When we come back, we'll track the pre-open as well. Here are some views from Gaurav Ratnapark. We'll be back in a moment.
Nifty witnessed multi-week rally which has halted near 8,000 mark, and from there it has entered correction mode. In the last week, Nifty formed a doji pattern on the weekly chart which was showing loss of momentum on the way up, and as a result it has entered correction mode. And for the last week, Nifty has formed a bearish outside bar on the weekly chart. So I'm expecting the correction to continue further, and from short-term perspective, 76.80, 75.75 will be the targets. And on the higher side, 79.80, 8,000 will continue to act as a resistance area. Tata Communication has been rallying since 9 consecutive weeks. The entire rise has unfolded in a channelized manner. However, the pullback looks over in the last week, and the stock is now about to break lower end of the channel. The daily momentum indicator has already triggered bearish crossover ahead of the price breakout. So I have a sell call on Tatacom futures with stop loss at 426 and target will be 395. Since the beginning of March, OVC has formed a pullback which faced resistance near 20-week simple moving average. In terms of wave structure, it was a complex pullback which looks over now, and the stock has resumed the larger downtrend. On the way down, the stock has broken its crucial daily moving averages as well as a crucial rising trend line. Even the daily momentum indicator is in line with the bearish expectation. So one can sell OBC futures with stop loss at 94 and target from trading perspective will be 85.50. Ashok Leyland on the daily chart has formed a running triangular pattern which is a continuation pattern. Near lower end of the pattern, 40 daily exponential moving average and daily lower Bollinger Band are there to provide support to the counter. So here on, Ashok Leyland can start a fresh move on the upside. The weekly momentum indicator is already in bullish mode, whereas the daily momentum indicator can start a new cycle on the upside. So Ashok Leyland can be bought with stop loss of 104.30 and target on the upside will be 112.80.
Welcome back. You're with us on Street Smart. We're just counting down to pre-open. Just a couple of minutes to go at this point. We've got both Ruchit and Chandan also still with us. In fact, Chandan, let's go through some of your strategies as we head into pre-open. Now, what's going to be on your radar today?
Yes, talking about trading ideas, we may see some profit booking decline in the overall market. So I have selected the stock which are from the non-index counter and might see the outperformance even after the market pressure, and selected few counter which are showing the negative movement with built up of a short position. First trade is buy on Sun TV. The stock is given a consolidation breakout on last trading session and added fresh built up of long position. Just couple of weeks back it corrected from 383 to 350 kind of levels, and now started to again move up with consolidation breakout and holding above 50-day moving average. So we may see a follow buying into the counter because of its better rollover activity. So recommending to buy with a stop loss of 360 for a higher target of 390 level. Second trade is from pharma space, that is the granules. We have seen a strong momentum in Biocon granule in India, also looks now attractive. It is continuously making higher tops, higher bottom formation and holding the gains. On last trading session, last trading session, we have the result of the counter, and the delivery volume and the rising open interest indicates that momentum extend. So recommending to buy for target of 141 by keeping the stop loss of 132. And third trading idea on the buy side is buy on DLF. This stock is continuously holding the gains even after the market volatility. Earlier it used to be a high beta counter, used to decline much faster than the Nifty decline, but now the way it is continuously holding the gains and moving on higher side with long built up in the put writing indicates that a stock can move on higher side. We are recommending to trade with 130 call on a small decline, keep the stop loss of 3 rupees and expecting this call to move towards 10 rupees.
Okay, Ruchit, your strategies today?
Yeah, my first call is a buy call in ONGC. Well, probably this is one of the stock which has not moved in tandem with the index since last many months. And now, if we individually observe the stock, then the stock has given a breakout from a falling channel. So 210 is now a good support for the stock. So keep a stop loss below 210 and for a target of 232 in near term. This stock, in spite, even if the market's correct, and as we spoke about that 7750 support level, and even if the index breaks those 7750 level, I don't think this stock would now show any much bigger corrective move. So after this breakout, there's a good chance of higher top, higher bottom continuation in this stock now. So one can look to buy ONGC at current levels. And my second call would be a buy call in Pidilite. This is a bit from medium term perspective, from if anyone is looking from 2 to 3 months perspective. Now we have seen some impulsive up moves from its lower levels of 770, 780 in last couple of months. If you observe weekly and the monthly charts, then there is a strong breakout of a falling trend line. Plus the monthly RSI is now about 70. So generally, when monthly RSI goes above 70, although it's an overbought zone, but initially when for the first time it goes above 70, that's when the trend is very strong. And for at least for next couple of months, it's expected that the trend would continue before giving any sort of negative crossover. So that's why I'm recommending from 1 to 2 months perspective, one can buy Pidilite, keep a stop loss below 910 rupees, and target on the higher side would be 1100. So there's a good risk reward ratio for going long in Pidilite at current levels.
All right, the index on pre-open, marginal uptick coming in so far, around 7900 so far on the Nifty.
So we'll just have to watch because global markets at least not looking that great. So we'll see if it can be retained. 7750 is the level on the downside. On the upside, 8,000 if we can cross it first.
Okay, let's also take a look at the currency, trading at about 66.4 right now. We've got Partha Bhattacharya also online with us. Partha, what's the currency looking like at the moment?
Yeah, good morning, Abha. This post-US Q1 GDP results, which came much lower than expected. Of course, one thing I think market is not talking about, last year Q1 GDP growth was also pretty low. It moved up subsequently. The year-end GDP was pretty handsome. So that we have to see whether this is just first quarter GDP growth will be adjusted subsequently. But as of now, GDP was bad. Other numbers are also bad, excepting home investments, residential investments were the only number which was good. Otherwise, today China manufacturing PMI has come a little lower than expected. The non-manufacturing has also come a little lower than expected. Japanese manufacturing PMI has come lower than expected. Generally, dollar index has come down sharply. So generally, there is a lot of risk aversion in the market. For India, FIA flows have been thinning out a little bit, and we have to see how that pans out. So despite oil price also off its low highs. Also about the oil price, some people are talking about that oil price upmove is possible. I am not sure with the fragile state of the global economy now. US has joined this fragility of the economic growth. Then how oil price upmove will be sustained or not is a big question mark. So if oil price does not come off, comes down again, risk assessment will be different. So if inflows do not come, there would be an RBI strongly there at the lower level of dollar rupee, as you can see from increase in forex reserve. Rupee appreciation is limited around 66.10. They have been very strong. They have been holding at that level. I don't expect that to be breached, and there will be marginal pressure on rupee, not big time, but gradual depreciation pressure would be there. There is some Iran oil payment, some agreement has been reached about 6 billion or so. So that will also, but not a big amount, but that also would be adding to the pressure on rupee. So it's marginal depreciation bias. And today's range, of course, would be around 66.30 to 66.60. Today, many markets are also closed. UK market is closed. Asian, some of the markets are closed. So flows also would be very low today.
All right, Partha, thanks for that quick check on the currency. Still an uptick there when it comes to pre-open trade so far this morning. Let's take a look at some of the other stocks we're watching out for on opening today. Banking, Chandan, let's take a look at the Bank Nifty and some of the key constituents there as well. ICICI Axis numbers have raised some concerns on asset quality. We're watching out for some more earnings as well going forward. HDFC today, of course, from the housing finance pocket. But from the banking pack, what are you tracking?
Yes, first looking at the Bank Nifty, it has seen the strong momentum from 13,400 to 17,000 levels in last 2 months, and on daily chart it made a very salami cross kind of reversal pattern, and because of that it might witness some consolidation of profit booking decline. It has multiple hurdle near to 17,000, while on downside multiple support near to 16,500 zone. So Bank Nifty holds below 16,500 zone only, the immediate trend would negate for a potential downside target of 16,250 to 16,000 level. So those who are holding the long position, better to keep the trailing stop loss of 16,500 on the sustainable basis. Below that, immediate trend may take a pause or may turn on the lower side. Now talking about the selective banking counters, Bank Nifty outperformed the broader market in last 2 series compared to the Nifty index. Now looking at the selective counters, we have seen the strong momentum in selective private bank like Yes Bank, IndusInd Bank and SDFC Bank, and these stocks are looking good as per the rollover data. First, if I look at the SDFC Bank, this stock has seen the rally of around 4 to 5% in the last series and now hovering near to its lifetime high territory. We have seen better rollover with better roll cost. So here the momentum may extend. Buying would come only on the decline near to 1080 zone. Traders can use the decline for buying interest towards 1135 levels. Other stocks which are showing strength like IndusInd Bank and Yes Bank, although these stocks have seen the strong rally, risk ratio might not favor, but after a consolidation again we'll keep these stocks on radar to buy on decline opportunity. Talking about the ICICI Bank, this stock has fallen down. It has corrected in last 5 trading session from 257 to 232 kind of levels, 239 kind of levels. It has support now near to 230, 228 levels, so one can buy near to that support. So selective stock specific action likely to be there in the counter. In PSU banks, most of the banking counter are started to witness some fresh selling. So those who are interested to buy in the banking sector, better to be with the private banks like Yes Bank, IndusInd Bank or SDFC Bank. While I have sell idea on Syndicate Bank, on Bank of India. Talking about the Bank India, on last trading session it has corrected with the addition of open interest on the negative side. It has failed to surpass the crucial hurdle of 100 zone for struggle of last 3-4 trading sessions. So recommending to sell with a stop loss of 96 for the downside target towards 88 levels.
Richard, a couple of stocks where the charts look strong, but if any of them are on your list: Indiabulls Real Estate, Piramal Enterprises, Aban Offshore, UPL, and Bata.
Among the stock, I'm very bullish on Indiabulls Real Estate. We have seen some real estate stocks in last week giving a good up move. What have been seen that especially in IB Real, it has been backed by very good volume, so that that leads to a conclusion that it may be a start of a medium-term uptrend in this stock. So any decline in IB Real Estate would be a good buying opportunity. Apart from that, Bata and definitely Bata is also doing well, but the stock has already rallied much from lower levels, and the momentum readings are in overbought zone over here. So I'm expecting some sort of profit booking or some sort of corrective action in Bata, in spite of the stock showing good momentum in last week. So any long positions in the Bata should be exited at current levels, as some profit booking could be seen in this stock, and IBReal, any corrective dip should be used as a buying opportunity.
Also take a couple of smaller stocks if you have looked at them. Tata Metallics, Diamond Power, I think sugar. Piyush was telling me there's also been some increase in global prices, maybe 4%. But anyway, I mean, sugar has already also been on a tear. So Tata Metallics, Diamond Power, and if you've looked at sugar, is there a recovery, or basically sugar's gone into some kind of a channel?
Well, Ashu, was coming to Tata Metallics, we have seen some good volumes coming in on Friday, and the stock has also given a breakout with a gap up opening. So that's a good positive sign for the stock. The stock could come up to 145, 147 in near term. So the long position should definitely be held in Tata Metallics. And also, if anyone wants to create fresh buy positions, then around 124 it could be a good buy with stop loss below 116 for target of 145, 147. Among the sugar stocks, we do like Balrampur Chini, even at current levels. We have seen some good amount of uptrend in 5-6 months, and then some consolidation coming in last couple of months. So this consolidation just seems that it's the trend is still intact. There's no reversal sign in these stocks. So I think the uptrend in the sugar stocks would continue. Traders or investors amongst this sugar pack should focus on Balrampur Chini. A steady higher top, higher bottom formation is been taking in this stock, and rather than showing price correction, the stock usually chooses to show time-wise correction. So after a sideways consolidation, we are expecting again an upside momentum. Even from current levels, I think 25 to 30% up move could be seen if we take from in next 4 to 6 months. So I would be bullish on the sugar stocks even at current levels, and Balrampur Chini would be the top pick among this in this sector.
Okay, we've got the pre-open quotes coming in. So just a marginal downtick so far in the pre-open session. We'll also bring up some of the stocks. ICICI Bank's down 4% today. So of course, now that perhaps analysts have had a chance to go through some of those details from the con call and so forth, so further reaction on those earnings. On the upside, some of the pharma names, banks, even oil and gas, seeing some attraction. Infi, Maruti, marginal uptick on some of those names as well. But I think it's also really the earnings focused stocks, so Titan, Federal Bank, etc., that will also continue to be in focus today. And we're watching out for HDFC also, of course, in terms of reporting earnings later today. Mehraboon Irani and Mohit Gaba also joining us this morning. So we've got a packed house today to take us through some of the stocks and what we're watching out for. Mehraboon, let me bring you in here as well and get your perspective on things. You know, we're heading into opening. We've been trying to overcome 8,000. As Ashu's been reiterating, you know, money's flowing in and funds are not really the issue. It's really a bigger question on really, you know, the fundamental picture at this point of time and how stable that is.
I think if you go back to December, January, February, I think people are looking at that, December data, extrapolating it, talking of doomsday, China getting finished. When the data came out, smart money went in, commodities went up.